Cody, tell me something that you believe about flex industrial that might surprise listeners.
I think that it is probably the easiest learning curve of all commercial real estate investment, not just for investors, but for developing as well.
Listeners, welcome to the Source of Commercial Real Estate, where we talk to the experts in non-residential commercial real estate so you can grow your business, find a competitive advantage, and use real estate to live the life that you want. I'm your host, Jonathan Hayek, and I'm a former public school teacher who found financial freedom through residential real estate investing, and now I invest in commercial properties, particularly small industrial. And today I'm talking with Cody Payne. He's a senior vice president at Colliers, Texas, and he specializes in selling flex industrial investment properties across Texas. Over the past 19 years, Cody and his team have closed more than 850 real estate transactions. Cody's team is known as Flex Parks USA, and they've continued to lead the investment sale market for small bay flex industrial with a continued focus on bringing more investors, funds, and institutions to the asset class. Cody, thank you so much for joining me today. This is an asset class that I am particularly interested in. How are you doing today?
Man, I'm doing great. Doing real good. I'm glad to talk to you about it. Love the asset class. Obviously, been doing it for a long time. Hope I like it. But yeah, love talking on it. Love the evolution of it. We love how it continues to expand its tenant database and everything else. So yeah, ready to go.
Cody, why don't you tell us a little bit more about your background, how you got started in real estate, and what your work looks like today?
So I started in 2005. I was working for a local firm out here in the mid cities, and the broker that ran that shop, he did a lot of big box leasing and sales, and he didn't want me meddling in that. So he said, "Hey, go work on the small bay stuff," which is, as you probably know, back then it was very unpopular. Nobody wanted it. It was kind of a dog product. Um, it had a lot of different names, like the dirty fingernail asset and stuff like that. But it's grown quite a bit. Caught a lot of fire in 2018. Caught even more fire in 2020, and it's continued to do very well. We invest in it as on our side as well. We develop it. We help people build it, help bring equity to it. But our main forte is the investment side, where we, continue to sell these off to either larger funds to sell off to other people, continue to bring awareness from larger groups into it. And that's been a big push of ours over the past few years.
Before we go any further, let's define some terms because in this world of industrial real estate, we throw around all kinds of terms like flex and small bay and class B and office warehouse. So I want to kind of zone in on exactly what is your specialty. Can you describe the product?
Well, I think that flex space, small bay, shallow bay, I think all those are the same meaning. I think people just use those terms, but they all mean the same thing. And basically, what it is it's a small warehouse space. A lot of them are ranging anywhere from 1,000 to 5,000 square feet, with the ability to expand and downsize fairly easily. That's what makes it flexible, and it also is very flexible for a lot of the users. But I think once you start getting out of that, you start exceeding that 5 and 10,000 square feet, you now are starting to go to mid-level stuff. And so the smaller base stuff is going to be heavier, multi-tenanted. It's almost going to be like multifamily of the industrial space, in my opinion.
And what do you mean by that?
Just a lot of tenants. We just sold a park that was 225,000 square feet and it had 110 tenants in it. There's plenty of cases where you see big box that's 225,000 square feet with one tenant in it. And so, these are very heavy, multi-tenanted, usually occupied by your, light industrial subcontractors, general contractors. It's even an airspace that's made its way into the retail and office sector as well, depending on the build. But it's a lot of local, regional, not as many national credit tenants. It's not uncommon to see them in there, but it's a lot of more localized tenants in these type of builds.
Okay, makes a lot of sense. So I can picture it. I'm picturing like a big industrial park with a bunch of bay doors and a bunch of little passage doors, and these are 1,000 to 5,000 square feet. Probably a little bathroom inside. A warehouse section, maybe a little office in each of these units. Is that kind of the layout?
Yeah, your typical layout is going to be you walk in, it's an office, a restroom, and the rest is warehouse. Now, obviously, you can expand on that, and a lot of people do, but that is the most ideal space that you see whenever you go into one of these. And whenever they're built, that's usually how they're built as well.
I'm curious. I with the I guess increasing popularity of this asset class, I've seen some investors and developers get a little creative and take some liberties with this layout. And with construction costs being what they are, I've seen some investors maybe not include bathrooms, not include office, and so it's really just kind of glorified storage with maybe a little bit of power and maybe more centralized office, maybe a centralized office, maybe centralized bathrooms, and that's kind of a variation of this flex small bay product. Do you have any opinions? Are you seeing that sort of variation catch on, or do you feel like that's cutting corners of what should be done?
Well, that type of build, whenever you have something like that, we call that the efficient build, which is the same thing as the cheapest route possible. There's a lot of different builds you can do on this. You got the efficient build, the showroom flex, the premium, the condo, the hybrid. There's a lot of different builds that you can do on there. We like the showroom style, which has a little bit more showroom glass on the front with the garage door. And so, that can tailor not just to your light industrial and subcontractors, but you can also get, commercial kitchens, retail guys, and even some office guys in there. And so, obviously, like any asset class, you can go as cheap as possible or you can go over the top as possible. But, there's actually a lot of ways to amenitize these assets as well with mezzanine space, higher ceilings, more parking, storage side yards. There's a lot of little things you can do as well to help amenitize them, which we're big on because, as you know, anytime an asset class is on the rise, you're going to have a lot of competition coming in. So, diversifying yourself from these other guys, building a brand, building, a good branded amenitized park is going to be, I think, the best path to success with these.
And that's kind of I think, an overlap with office, and these are very different asset classes in very different parts of the market cycle. But that's kind of the pattern in the office space as well. Attracting great tenants and potentially gaining higher rents is going a little bit above and beyond and highly amenitizing. When you talked about the showroom style, and you talked about having a little more glass and maybe like a transparent bay door or a little more transparency on the bay door. I've seen those and they look really attractive. And, even for, like a woodworker or a granite manufacturer or a plumber or something, somebody sees that, I would think, and would say, like, wow, that looks cool. I want to work there. Is that kind of the idea, just getting a little bit more of a competitive advantage?
Absolutely, and you're right. It's just like office right now. Office is not doing good across the U.S. It's really not doing good, in a lot of areas, even out here. And so a lot of them are rushing to amenitize them. And it's similar to multifamily as well. Amenities are very, very key, and especially with these light industrial buildings, it's not uncommon to see, people doing freestanding docks so people can accept stuff from 18 wheelers because, a lot of these grade level doors, they just don't have that ability. And so I think that understanding amenities and how they play a part and also how you build it is going to play a huge factor in not just the rent you get, but how much you get on it when you decide to sell it.
All right. Cody, let's back up a little bit to one of my first questions that I skipped over because we got off on a good tangent there. But why don't you give us a little bit of an overview? Tell us kind of where we've been in this asset class and where we are now. We had COVID was certainly a whirlwind for this asset class, but kind of give us a rundown of where we've been and where do we stand today.
Well, I think COVID helped out quite a bit, and actually one of the biggest things that helped out is when it started attracting other tenants, right? And so, like, we're selling a park right now that has actually two retail tenants in it that came from retail centers, and the reason they came here is they got a little bit more space, a little bit more flexibility, but they also got it at a substantially cheaper rate. And they also said that their business doesn't run off of drive-by traffic anymore, which, as you know, since COVID, retail has really started to see that. It's not uncommon to see office tenants in these as well, taking advantage of the layouts and the rents and that nature and the drive-up ability. But, you know, especially on the sales side, the investment sales side, I think the reason why they've become so popular to investors is because besides self-storage, it's probably next in line, the second best inflation fighter when it comes to, you know, tenant turnover, TIs, commissions, all that kind of stuff. Because as you know, with office, with retail, multifamily, you know, some of these other asset classes, when a tenant leaves, the cost to refurbish those spaces has gone up significantly. Well, here, a lot of times, in many cases, there's very little to, if none, put back into the space. And a lot of times tenants put their own money into the space as well. So it's one of the best inflation fighters, which has been, you know, the biggest key on investing in real estate over the past few years. And I think that's why so many people have gone to it, not just with the expanding tenant pool.
Can you talk about values and demand from tenants over the course of the last few years? How have you seen it change, and where does it stand today?
And when you say that, are you talking about in rental rates or tenant, you know, retention and tenant pool? Is that kind of what you're looking at?
All of it, kind of demand, and then overall, you know, value on the sale side.
So as far as gaining tenants and traction, I mean, you're obviously depending on area. I mean, your months on market is very, very friendly, and your annual rent escalations have been very good year over year. Some areas we've seen it at 8%. A lot of them are running around 3 and 5, obviously, which, you know, is 3 is kind of standard, but that's why so many people do short-term leases on these, because they have been increasing so drastically in some of these areas. We've got one park that we sold actually out there in Fort Worth that had a bunch of tenants in there around 8-9 gross, and they've been renewing those guys at $14 plus triple net, which is almost double in rent when you add the nets. And so, you know, there's still a lot of value add aspect to it, still a lot of rent growth on it, obviously depending on area. But, you know, I think with the tenant pool continue to expand, with the small businesses being, you know, one of the main drivers in our economy, you know, those things are really the biggest benefactor that are, you know, taking advantage of these buildings and spaces. And then also, you got a lot of companies that, you know, back when I first started, like there was a CO2 company out here that in DFW was based in the mid-cities, which is between Dallas-Fort Worth. Well, it's grown so much out here that they don't have the ability to service all of DFW from that hub. So they actually made a bunch of satellite offices in flex spaces all across DFW. And so you've got a lot of those guys as well that are also taking a lot of advantage of these assets.
So let's talk to investors a little bit. Let's say an investor is considering one of these small bay flex properties. And so what should an investor be looking at to make sure that the property they're considering is attractive to the widest variety of potential tenants?
So if you're looking at a existing project, what we always tell people is obviously you want to look at the area, you want to see where your rents are here, where everyone else's rents are. And then you want to look at, how do I amenitize the building to, you know, gain traction with more tenants? Can I add some side yards on the front or side? Can I do this or that? How do I also brand the building to be a branded park? And so it's looking at all those factors to not just say, hey, can I just go in and bump rents? It's, hey, can I go in and bump rents? How do I do it? How do I make sure that these tenants stay? How do I provide the right amenities and layouts and construct or, make sure the park is operating efficiently? If you got some tenants that are clogging the parking lot, how do we clear those guys out? Auto tenants obviously can run wild in some of these. But I think it's really going in and looking at what is it missing and how do we take advantage of that? Because you'd be surprised how many of these parks that people will buy, and there's a substantial amount of land left over on it. Industrial outdoor storage, which is also known as IOS, is highly, highly sought after, and it's a very good moneymaker as well. And so that's something that we've seen a lot of people adding on to these facilities.
Will you talk specifically about the physical characteristics of a great property? If it's, I'm thinking about the bay door size, the ratio of office versus warehouse, flooring, floor drains, mezzanine levels. Are there any like physical characteristics like that are going to make a property especially attractive to a tenant?
I'll tell you the things that I like the most, whether, when you're looking at it on the investment side and you're like, hey, how do I attract the most tenants? You want to get a ceiling height at least 18, right? I prefer 20. That way you can have 16-foot doors. I like a high ceiling. I like an abundant amount of parking and as little office finish out as possible. And you would be surprised how many of these buildings actually don't have restrooms in the suites. I'm a big fan of restrooms actually being in the spaces. I think that's just a big thing that a lot of tenants do ask for, and it's crazy how many times we'll get a building and we'll ask, is there restrooms? They're like, no, there's one restroom facility in the whole park that everybody has to share and use. And you'll see in that a lot of times their rental rates are significantly less because of that. But the main factors that I'm going to look at is parking, ceiling height, garage door, minimal office, and if there's extra land.
If an investor is interested in this asset class, are there any other key factors? So we talked about some amenities. Will you talk about maybe location and rental rates? How is an investor to evaluate whether or not a location is a good location for a flex property?
Well, I think there's a lot of factors that make a location a good location. Obviously, traffic counts are huge, right? Household incomes, average home values, things of that nature. Anytime you're looking at a park, I'm sorry, Jonathan, what were you going to say?
Sorry. I mean, it's interesting that you bring those things up because those are factors that I would think of in terms of retail and multifamily, maybe office, but those factors, traffic counts and average household income, those are still important with this asset class.
The reason I like those is because, like I said, I'm a big fan of the Showroom flex park, right? That's got the glass. And if you can find a park that you can add that to, that's huge, where you can maybe have, some nice signage out there as well. I like that because that is the best, most popular and largest tenant pool that you'll find. And so that's what I look for. Obviously traffic counts. I've never seen traffic counts affect a project, unless you're a home sitting right on the highway. But as far as a commercial real estate investment asset, I mean, I think traffic's huge, home values is huge, and if you got a park that's filled with some subcontractors, another stat that we look at is home ownership versus renter. And what you'll find when the home ownership is actually higher than the renter, you'll see that you'll be able to get a lot different and more subcontractors like pool companies, landscapers, things like that, because home ownership and a lot of these you'll find are utilizing more services than if it's maybe heavier multifamily or something of that nature. And so there's a lot of different things we look at, and we also help people find land to build and build these sites on. And there's a laundry list of stuff that we look at, because if you're infill, you're not going to have the population increasing year over year as much as you will maybe on a outskirt market. And so each one's going to kind of tailor different to it, but those are some of the key factors that we look at. But yeah, I'm a big believer in exposure and visibility. I know a lot of people aren't, but I can tell you, I mean, you build the right product with a good visibility, and you'll do substantially better than people that don't have it.
In some ways I'm surprised, but in other ways I really shouldn't be surprised, because it's really real estate fundamentals. You want a great property in a great location, and regardless of asset class, it's probably going to do pretty well. I want to ask you about some of those infill locations. There's a lot of product out there owned by mom and pops, built in the 80s, early 90s, might be antiquated. They might have low rents. They might have lots of month-to-month leases, stuff like that. Some guy has owned it for 30 years. And, there could be some value-add opportunities for somebody like myself. When you're looking at those types of properties and looking at them with clients, are there any characteristics or anything about those types of older buildings that have fallen out of favor with what tenants are looking for today? Or are those builds just as good as the properties being built today?
Well, I mean, infill is the most sought after, obviously, for funds and institutions, right? And that's really what their main forte is. What you'll find, though, on a lot of infill is, they're going to be older in many cases. Their ceiling height will be lower in many cases as well. And if you've got zoning restrictions on them, then, there's certain tenants that you may not be able to get in some of those. And so that's the only thing that you really need to look out for on the infill side. And you don't always get better rates on infill. I mean, I can tell you last year, the highest price per square foot that we got on a lot of projects were on metal, not on infill tilt wall. And, your expenses are generally higher on infill because your taxes are higher, your R&M is a little higher. There's a little bit more maintenance involved on some of those older business parks. And so, the infill side has a lot of good opportunities. And I will tell you, I think that on the flex side, I was talking to a friend of mine that sells multifamily, and he said if you're looking for value add multifamily, those days are done and gone. But I'll tell you, on the small bay flex, you can find great stuff. We just closed a park where the rents were almost half of what the market should be, and it's not uncommon to find those. I do think over the next couple of years, those will be all bought up and done, because that's kind of what a lot of people are looking for. But finding those lower rented, older mom and pops, as we call them, ownership, is still absolutely out there, and still good opportunities to buy on that side.
Cody, in the intro, you talked about why you talked about how you feel like this asset class is one of the easiest commercial real estate asset classes to learn and to get into. I'm interested to hear more about that. Why do you feel like this asset class has a little bit lower barrier to entry?
Well, I think especially if you're a developer building this type of stuff, it's a lot simpler, a lot less TIs. Getting a, civil to draw something up and then a good designer to do it. I mean, it's very easy, especially if you're doing a metal project, which is what most people are doing on new builds. I mean, there's metal builders all over the place that can build these, whip them up. They can put them down very, very quickly. Especially if you do something in the county where you don't have as much red tape and restrictions. But for new people coming into it, I mean, think about if you were going to go build a retail center, a multifamily complex, how much red tape you got to go through on a lot of those, and the amount of finish out per unit. I mean, the finish out alone in these small bay flexes are next to nothing. And when you just have an office and a restroom and AC that, and then lights in the warehouse, and then, you're doing your electrical that's running around $6 a foot. I mean, it's very plain, very simple, very straightforward. And we deal with a lot of new developers that have come from other assets, and not many issues whatsoever. The only issues that we see people run into, obviously, is if they're in the city and they're trying to get something rezoned, because not all cities are as friendly towards small bay flex, especially if you're trying to do metal.
So you touched on development and you talked about development a little bit earlier. So I'd love to ask you some questions about development.
Yeah.
I know you and your team are active in helping investors and developers get these projects going. So will you talk a little bit about the potential opportunity that you see in the development of this product?
Yeah, I think with the amount of growing areas across the U.S., not just in like where you're at in Colorado, but Arizona, Georgia, Florida, Texas. There's a lot of areas that are very good up and coming areas that are phenomenal for new flex development, and there's not enough people building it, in my opinion. And so I think that if somebody's looking to get into it, you just find somebody that knows the area very, very well, can help you get into a good land site at a good value, understanding zoning restrictions, codes, and things of that nature if you have them on there, and then lining yourself up with a good civil and engineer and builder to get it knocked out. But as far as buying a piece of land and building it, I mean, it's as long as you don't run into certain zoning issues or civil floodplain issues, things like that, it's usually pretty straightforward.
And for all the reasons that we've talked about, I know this idea is very attractive to a lot of investors. We talked earlier about some of the things that people should look out for, like average household income, traffic counts, home ownership rates, things like that. What other factors do you help your clients with in determining if a certain location is a good candidate for some development?
So we run it through a program that we actually have here. It's called the World Engine. I thought of that name. It sounded really cool. But we actually put it in there, and it runs through a lot of different demographics. Spending per capita, which will tell you, if maybe it's got a good showroom retail tenant base that could come in there. Housing value, businesses in the area, the amount of new businesses that have come in the area over the past few years. And so there's a lot of things that we look at on there. And then once you determine if the area is good, then you start pinning on the land and figuring out, all right, do we have elevation issues here? Do we have floodplain issues? How do we overcome those? How do we now structure the park in a way that is most efficient? We have another program that's a test fit that we can take a piece of land and kind of show preliminarily how many buildings we can get on there in square feet. So that gives you enough to be dangerous to figure out, all right, so now we got that. Now we go figure out what our rental rates are and our lease up timeline. And now that you got all that, you get your build cost, now you got your delta, and that's your profit margin, and you figure out if you can work within that or not. And, if it works, then let's move. If not, let's go find something else.
What's the best way for an investor to determine potential rental rates for a property?
So, I mean, the first things first is to see if there's competition in the area. You want to call on that competition. We call on it. You call on it. You say, hey, what's your rate? How long has the space been available? How many spaces do you have? What's your average lease up timeline? You get that info from a lot of the, competitors out there, and that will give you a good idea of where you would be at. If there's zero product in that area, then you got to just research similar style demographic areas, and we do that, and that will also give you a good estimate of rental rate, lease up timeline, and type of tenants that you might see there as well.
When you're making that initial phone call and you're saying, hey, how long has this been available? What's the rate? How many units do you have? Is that like secret shopping? Like, hey, I'm a cabinet maker and I'm looking for a spot. Or are you more forthcoming and you say, hey, I'm a broker with Colliers, just checking for comps?
Yeah, no, I mean, with me, I just call and I say, hey, Cody Payne with Colliers. We're, looking at doing some stuff out here. Check to see, how much space do you have available? I mean, how long has this suite been available? I mean, you lease up pretty good. What's your occupancy? What are you getting on? And a lot of people are pretty open to it. Nobody's going to, tell you to screw off so much unless you say, hey, I'm building a facility directly next door. I mean, that's the only time you probably would get some hesitation. Which is what a lot of self-storage guys do, but no, it's pretty easy, pretty friendly. And to be honest with you, the rates are pretty easy to find too online.
Cody, I want to talk a little bit more about your competitive advantage when it comes to assisting investors and developers in the ground up process. So you talked a little bit about your World Engine. I love that. It sounds like some proprietary software that you all created or you have access to, and it sounds like a huge competitive advantage. Will you talk a little bit more about why should a developer work with you? Why should you be on the team of the developer when they're going ground up with one of these facilities?
I think the biggest advantage that we have with people is, and we do these models all over the U.S. for people. I mean, we probably do anywhere between 50 and 100 a month. And the reason being is because what we'll do in these is we'll say, look, this is what we are projecting the lease up timeline for. This is what your potential rental rate will be. But at the end of the day, this is what your sales price would be in today's market and in, a couple of years ago when the interest rates were at this side. And so what we're then doing is giving people a build to sell model. And whenever you have that, you have your you then understand, all right, when I build this thing, this is my sale value. And I think when a lot of people understand that, you understand, okay, that's my sale value. This is what I have in it. My delta's, pretty good here. No way I can lose. It makes great cash flow. Let's get it going. And so, when you got a group like ours that sell these buildings for a living and that, are continuously bringing new people into it, we can tell people, pretty accurately, I would say, just because we've been doing it for so long is, hey, at the end of the day, you build this project, this is kind of the range that it will sell for. And I think that gives a lot of people a lot more comfort than just going in blind on just a cash flow basis. Because as a lot of people go off of cap rate and stuff like that. Well, cap rate is one of the more misleading terms I see in the brokerage community. And so, we've sold stuff anywhere from a 4 up to a 9, but you can't take that 4 and blanket it across the U.S. And so, really understanding what the sale value is up front before you get started, I think is huge, absolutely huge. And especially from a team like ours, that's all we do is sell these.
Absolutely. And I think I heard you right. You said you do 50 to 100 of these a month. And
Yeah.
I think, and you said that you do them all over the country. And so you're not just doing these for local clients. Even me in Colorado or somebody in New Hampshire or Washington State could theoretically call you and say, hey, Cody, I need some help from your team in helping gauge if this project is worth pursuing.
Absolutely. Yeah. We do them all over. And look, I'll give you just an interesting stat. So like, just take Texas, for example. All the buildings we sold in Texas last year, all the parks we sold in Texas last year, 70% of them were out-of-state buyers that, operated in other states. And so a lot of these you'll find, the only states that you really find that are heavier buying in their own states are going to be California, New York, Jersey. Those are going to be your prominent in-state buyers. But pretty much every other state, I mean, you'll see a very high margin in a lot of these that are out-of-state guys. And so really what that is matching up the return basis that they need, whether it's got a cash flow return basis, a future pro forma return basis, a general real estate inflation basis. I mean, a lot of them are calculated very similar, and that's the best thing about the small bay flex parks is they run very similar. Obviously, when you start scaling up and going into like Class A areas and stuff like that, the cap rates start to move down a little bit. But yeah, we work all over. We're with Colliers International, so we've got an office in every state. Many states we got several offices.
Cody, do you have a gauge on what the average cost to build ground up is right now?
So if you do a lower end metal efficient build, you're going to be around $100 a foot, 100, 110. When you start adding showroom glass, some other stuff, you're going to start seeing 115, 120, 125. We've seen people get up to $180 a foot on the build side, on the metal side. On the tilt wall concrete, that is going to range quite a bit depending on how much you build. The price goes down quite a bit on tilt wall the more you build.
Yeah, really interesting stuff. I know tons of people are interested in this asset class, and
It's a great asset class.
almost I talked to a bunch of commercial real estate investors. Guys love building stuff, and so almost
Oh, yeah.
every real estate investor I talk to is like, I would love to build some flex industrial.
Man, we can help you do it. That's what we do.
Cody, you this has been an awesome conversation. You know so much about this stuff. It's almost like you should write a book. Do you have a book?
We did write a book, Jonathan. I actually have it. Hey, look at this. We got our flex space domination book. And we actually wrote that for a lot of people that are wanting to get into the business, that want to just kind of have an overview of it, kind of some things that we see, best practices, amenities, branding, what to look out for when building, how to capitalize on it, whether you're investing in it or starting up. It's a book that just gives you enough to be dangerous, and then you find somebody that can help you move on from there. Obviously, you always want to find an area specialist that can, help you get, everything you need down the road. Make sure you're getting the land at a good cost. Make sure you got good civil engineers, people that are going to help you. Building a team, I'm a big believer in having a good team around you. I've got a great team here that we've been together for a long time, and I wouldn't be where I'm at today. We wouldn't have this book. We wouldn't have a lot of things that we have if, we weren't around together for a long time. And so I'm a big believer of having a good team around you.
Yeah, that's great stuff. It's really cool to find books that are so specific in a niche that so many of us are interested in.
I think it's the only flex space book out there, actually, Jonathan. We couldn't find another one because, the reason we wrote it is we have so many people that call us. They're like, hey, talk to us about flex. How do we learn it? And so, and I don't want to say they were clogging up our phone line. So we're like, let's see if there's a how-to book or something. There one out there. So we said, you know what? Let's just write it.
I love it. One of my favorite quotes is from a guy named Kevin Kelly, and he says, "Don't be the best, be the only." So I love that you're just like, hey, it doesn't exist, so we're going to make it exist.
There you go. Good. My grandpa said, if you don't have all the power, you have no power.
Nice.
So, yeah, a little different, but...
All right, Cody, this has been a great conversation. I love this asset class, and I know lots of other people do as well. If listeners want to connect with you and your team, learn more about the book, where would you like to send people?
FlexBusinessParks.com. Give you everything you need to know there.
Great. Cody, thank you so much for joining me.
Thank you, Jonathan. I appreciate your time.
Listeners, thank you so much for joining us. We appreciate you so much. If you enjoyed this conversation, reach out to either one of us. We would love to connect with you. Thank you so much for listening. Until next time, take care.